Oil is trading at a 1-month high. So when it comes to individual oil stocks, which are the ones to watch and which are the ones to avoid? Hello, I'm David Jones from Capital.com. We did a video last month looking at some individual oil stocks and shares, and I thought we'd do an update this month, considering the oil price has recovered reasonably strongly over recent weeks. So in this video, I'll go through a few companies, look at their charts and see where the opportunities are. As usual, if you're watching this and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to put out lots of varied content like this in the months ahead. So here's the move in crude oil over recent weeks. So this is the cash price, US West Texas. So it went as low as $10, third week of April. Of course, the futures contract, the front month, went negative at the time. And as recently, the time recording, end of the week, has traded up to $29 a barrel. So a strong recovery. Just to show some recently added markets, we've added US crude oil futures. So you can trade various West Texas futures contracts now with us, as well as the cash price. And of course, the cash price for Brent crude and futures for Brent crude. We do have a trade running on oil at the moment. We bought 99 barrels in the previous video. That order got filled, pretty much break even at the moment. But these are the two stock trades we did in the last stock trading video. So buying BP at £3.13. That is underwater at the moment. That's down £66. But the frontline short is the one that's really paid off. So selling short frontline at 117, currently trading at 75. So we're up just over £500 on that. I'll talk about these two and some others, and we'll come back and look at everything in a lot more detail. So you saw that we've launched various US futures contracts. So now for Brent crude and West Texas, you can either trade the cash market or the futures market. So however you want to trade it, the instrument is there. We've also launched an oil portfolio index. I'll talk more about this towards the end of the video. But first of all, let's start off and get an update on BP. So we did look at this last time around and it had results coming up. It's the 10th largest company in the FTSE 100. So here in the UK, it's the 10th largest company pretty much on the UK stock market. And of course, it's involved in the exploration, refinery and delivery of energy. So really all aspects of that market is part of BP's business. We had results last month. These were strongly awaited really just to see what the impact would be of falling demand and a falling oil price. And there had been calls for big oil companies to cut their dividend. When it came to its quarterly results, BP saw its profit fall by 2/3 compared to the same period last year. But these profits still exceeded what the market's expectations had been. And it didn't cut its dividend. BP kept its dividend at the same level. But we have seen the share price under pressure. Some analysts are worried about the levels of debt the company has. It's at a 5-year high. We've got an existing position running on BP. Let's take a look at it and see where the opportunity could be. Should we be buyers or sellers after these results? So let's take a look at the BP chart. I mean, it had been in decline, a gradual decline for much of the last 12 months. Like many oil companies, fell off a cliff this year, the first few months of this year, traded as low as about £2.25. And we've seen a bounce back. It's been a little bit flat. Let's perhaps zoom in on what's been happening so far this year. So here's the year so far. We'll stick with a daily chart. I think what's interesting here, this 50-day moving average that did an okay job for much of this year for keeping any rallies under pressure. The same thing's happened again. It did blip above the 50-day on the 30th of April, but still pretty weak. I think perhaps the risk is if we lose that support from the third week of April, around about £2.80, share that sort of level, perhaps we'll see a revisiting of the most recent lows. So it's been a bit uninspiring over recent weeks. BP, looking at the RSI down here, not much really going on. The RSI trading about 40%, heading towards oversold, but still some distance away. The MACD looks like it could be about to give a sell signal. I think it just has actually on the most recent day. So at the moment, BP looking a little bit weak down here. And I think really needs to hold 280 to try and stage some sort of bounce back. So not looking too good for our position. But I've got a stop loss in at £2.50. And I think if it does fall to there, then for me, the bullish argument is out of the way for the bit. Time to stand back and see if we do see some sort of strength coming back in, if it drifts back to these old March lows. So losing a bit of steam at the moment. The next company we're going to look at, it's an update as well from last time around. We looked at Frontline. They're a Norwegian and US listed company. They're in the oil tanker storage business, so moving oil around the world. And of course, the reason that oil went negative, we saw crude oil, the futures contract trade at minus $37. One of the main reasons here was the cost of storage. There was oversupply in the market, there was lack of demand, so storage prices had gone up. So storage companies like Frontline really soared. We saw their share price, I think, pretty much double in fairly short order. So when we looked at this last time round, I decided to go short, taking the view, well, has the share price got ahead of itself? Since then, we've seen a massive collapse in the share price. I think this is something that's been repeated across various tanker companies. So let's take a look at this short. How well did it do? And is now the time to reverse the position and buy Frontline? So here's Frontline. Here's that surge as tanker costs really soared. So they were trading around 60 early March and touched 120 third week of April. That did end up being a really good short, going short at 117. Let's just look at the position. So 23rd of April, selling 150 short at 117.55. The market's currently 75. We moved the stop down to lock in at least some of those profits. The stop is currently at 90. The trade's up £518. I think it's interesting, this comparison with the BP trade. You know, it shows in trading, you don't have to be right all the time. What we want to try and do is make sure our profits are much bigger than our losses. So even if we're only right half the time, if we're making double what we lose when we're wrong, you know, we've still got a profitable strategy. I mean, this is an extreme one because it's moved so far. Let's go back to the chart. And I think it's interesting down here, Frontline, and I'm sure the story is similar for maybe some of the other storage companies. You know, we're dipping back, 60 to 70 had been pretty good support. It has slipped to a new low for this down move today, but you can see, looking at the RSI, that has approached oversold. The MACD still bearish, but is starting to roll over. So I think it will be interesting to see if we see buyers come back in. What I'm going to do, I'm going to move my stop loss down to 80. But I think if we see some stability come in down here, perhaps it is time to reverse the position and look to buy back in after all of this euphoria has calmed down. So let me just move the stop. So that order to buy back is in at 80. So again, locking in a chunk of profit, but giving it just a little bit more wiggle room if it does decide to fall further. And I think perhaps over the next couple of weeks, we'll come back to this one and see if it does show signs of forming a base. For now, I suppose there's still the potential for a slide back to those lows around about 60, but it has fallen, quite far in a matter of weeks. So perhaps we'll see a few bottom fishers coming in here. We're going to take a look at the major US company, ConocoPhillips, in a second. Before we do that, let me just show you our oil portfolio index. It's a way of getting exposure to 8 major US energy companies. I think the best way of explaining this is to have a very quick look at it on the chart. Then we'll come back and talk about Conoco. So if I put in oil into the search and just scroll down, here's the oil portfolio index. It's closed at the moment because it trades during US hours, but let me just show you. So we don't have an awful lot of data just yet because we've only recently launched it, but this is how it's made up. So it's 8 leading US energy companies: Chevron, ExxonMobil, ConocoPhillips, Occidental, Canadian Natural Resource, Apache, Noble Energy, and Whiting Petroleum. It's weighted, so each company has an equal impact on the index. There's the weightings down there. And I think it's just an interesting way of getting exposure to oil companies, whether you think they might go up or down, without having to pick one particular company and not having to trade crude oil directly. So ConocoPhillips, major exploration and production of oil and natural gas. It also had recent results, and Q1 revenues were more than half of what they'd been in the same period last year. Not surprising, like BP, we're seeing plenty of these oil companies taking a hit in the most recent quarter. What the company also announced, though, was deeper production cuts. Again, I think a fairly familiar theme, as we've seen a drop in demand due to economies being in shutdown due to the coronavirus. But ConocoPhillips there saying, look, we're gonna cut back on production. We've seen a strong bounce back by the shares over the last couple of months. They've more than doubled off what has been pretty low levels, it has to be said. But is there still more upside to come? Let's take a look and see where the opportunity might be. So here's ConocoPhillips. Again, the share price had been pretty much in decline for the best part of 18 months, going from about $80 a share. But let's focus once more on what's happened so far this year. So $67 a share in January, trades as low as almost 20, down to $20.80 March the 18th. And you can see bounces back up to 44-ish since then, 43.50, that sort of area. And I wonder, is this trend still going? You know, we've crossed above the 50-day moving average. Understandably, it went overbought late April into May. The MACD looks like it could be hooking to give us a sell signal here. So perhaps we'll see something of a sell-off. But if we focus on this recovery since March, let's make this an intraday chart. So here's our trend since those $20, $21 lows in March. And I'm quite tempted to be a buyer. We've got a bit of support, short-term support, 4th of May at 38, bigger support coming in at 34, bigger support again at 30. So lots of different levels of support here. So even though it may be a little weak over recent days, I'm quite tempted to be a buyer here. So what I'm going to do, I'm going to put a stop loss the other side of these lows. April 15th lows at 30. So let's say I'm going to go $29 for a stop on Conoco. At the moment, the market's closed. It's a US market. I'm recording this outside US market hours, but I'll set an order in. I'll set an order in to buy. If it dips, let's say I'm going to put my order in at 37. So I'm going to buy at 37 with a stop at 29. Let's set that up. So the price, the last price at the close was $40. I'm putting an order in to buy 31 shares. If the price gets to 37, so if it slips a bit lower, 10% lower or so, and if that order gets filled, put a stop loss in at 29, and that's for my usual risk of a couple of £100, which we always do on this account. The market is closed, but I can place the limit order. So my order there is sitting in the market. So I think that could be a good opportunity, given how much support there is running from $30 upwards to getting on any weakness and looking for the market to swing higher. We'll see how it turns out. That's it for this update on oil stocks. So we'll leave things there. But from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.